Thank you very much for that introduction. I appreciate the opportunity to be with you this afternoon. I want to thank the Africa Investor for inviting PPI to partner with the organization in conducting this program. It's been a great pleasure for us to participate, and we're looking forward to this afternoon's panel. But just a little bit of background, if I may, on the Pacific Pension and Investment Institute that I'm honored to be president of. It's a global membership organization that convenes pension and investment thought leaders for in-depth dialogue and knowledge sharing on issues that impact long-term institutional investing in Asia and around the world. Our membership is comprised of some of the leading pension funds and sovereign wealth funds, endowments and foundations from around the world, and their commercial asset managers. Collectively, our membership represents about $14 trillion in assets under management or advisement. PPI and Africa Investor share many of the same goals, including the promotion of knowledge sharing of best practices in investment management, bringing together the world's premier institutional investors for in-depth dialogue and on pressing issues facing the industry, and exploring new methods for finding diversified, risk-adjusted returns in a very difficult macro environment. With that, I'm very pleased to announce today a new partnership between PPI and AI, which will build on our two institutions' shared commitment to better understanding issues related to global infrastructure investment. PPI recently created a working group amongst our members to discuss and to create actionable steps to address the challenges facing infrastructure development. We are looking forward to participating in a special session this fall in New York with AI at the CEO level Institutional Investment Summit in New York. And we're looking forward to that partnership and bringing PPI's members together with Africa Investor followers here in Africa for the advancement of this very important area of international institutional investment. During the 71st UN General Assembly, both Africa Investor and the U.S. Department of Commerce hosted business and institutional investment leaders to advance the U.S.-Africa Economic Partnership agenda. The panel that we have with us today will build on the themes that were discussed during that session. And today I am joined on the stage by four leaders of the international institutional investor community. So you've now heard from two investment leaders on the continent and two from the United States, and I think it would be now appropriate to maybe open the floor to questions to see if anyone in the audience would like to respond to what has been said or to pose a different question. So we'll open it up and see if anyone has anything to say. Not yet? Yes, right here, please.
We've all been agreeing far too much, so I'm going to ask a deliberately provocative question, if I may. For Dr. Wangaita, you mentioned that investable projects, we need more information on investable projects. My question is, we've already established that we're not short of capital in the region, but how do the pension funds get into the investable projects early enough? Because many of the commercial banks in the region who have much more experience in project finance, frankly, it's easier to go to a commercial bank. You have one investor, they have much more experience. How do you get in early enough to get the space for the pension funds to get a role in the limited number of investable projects that are out there at the moment? And our colleagues in Uganda, I know they've had this issue. They would love to invest more. How do you get the pension funds space in the limited number of investable projects?
Okay. Thank you for the question. We normally use a lot of transaction advisors, especially when it comes to structuring those projects to such an extent that they are bankable. We will not invest in a project that is not bankable. And the board has actually made it clear to us that they will not support any project that is not bankable. So what we do for such projects, we get expertise from reputable firms, the big four, or strong or reputable investment banks to structure the project.
Thank you. Did you want to add? Okay, thank you. Another question? Yes, ma'am?
Thank you, Ms. Spencer, for your presentation. I just wanted to understand, what are the top 5 things that you look at before you invest in an African project? The top 5 things that you have to tick off.
We look at our policy, our investment policy, and pretty much use the same guidelines for investing with foreign managers. We have not yet invested outside of the U.S. directly in any fund. We have gone through U.S. private equity funds, fund-to-funds or direct, but primarily through the U.S. that does maybe 20% globally. But what we're basically looking for is a firm, for one thing, that's been in business for at least 5 years. We look at their organization structure, the people within the organization. We look at their general principles, the product that they have to bring to market. We look at the terms of the product. We're looking to generate double-digit plus returns, and if possible, shorter durations. You know, sometimes I say I like to see the returns in my lifetime. So.
I'd say, just to add to that, we also look for reasonable and repeatable strategies. We also look at the investment philosophies of the manager and risk controls, any risk controls or management system that they have around risk. Right. And lastly, we look for willingness to comply with applicable laws and codes and their ease of fund structure.
Thank you. I think there was a question right here in front and then behind. Okay, we'll come, yeah, right there.
Good afternoon. I have 2 quick questions. One is for the 2 U.S. pension funds, to sort of find out, how is it that you deal with the fact that today, with the size that you're talking about in terms of your total endowment, your total size, you're looking probably to deploy anywhere between, I would say, 100 to less, or a little on the smaller side, rather than 100 or more. In that case, how do you deal with the fact that you need to deal with much larger fund managers, yet you want to deploy towards the more promising smaller fund managers? And then the one for Uganda is, I'm curious as to how you wrap your head around having a single country, single sector investment when you're looking to have a diversification in terms of exits and opportunities. Why aren't you looking at the broader continental opportunity? Thanks.
Why don't we let our 2 American colleagues start?
So to answer your question, we do not look for investment based on the fund size particularly. It's not what we look for. What we try to look for is a fund that has other public pension funds invested in it. And that could mean investing alongside the bigger funds. Because we're small and our allocations are small, but small is relative. I need every penny in my fund to pay my retirees. I do have 10,000 retirees that I send a check to every month. And God forbid, I haven't missed a month yet, but if I do, I'm out of a job. So, but no, we do not base our decisions simply on the size of the fund itself, but it depends on the strategy, the structure. It depends on all the things we talked about. So when we're looking broadly.
And for us, size is not it's not equal to better or to, you know, a better manager. Sometimes when we invest, we're seed investors on managers with $25 million or less. We find smaller managers to be a little bit more nimble. They have diversity of thought. And this is coming from someone who started off with no minority managers, and now we're at 38%. So many of those managers, you know, we started their first funds, and we started with small, and they are growing. We also have large managers, but there is a place for small as well as large, and we look across the board as well.
Okay, thank you for the question. I think the context is what is important. We only invested in that fund 2 million euros. We took a portfolio perspective. And just to give an example, today if the Kenyan market, if the Kenyan Stock Exchange moves by probably say 2%, we lose much, much more than that. Yeah. So we took a portfolio perspective just to support a sector that was in need of capital.
Thank you. I think we have time for just one more question. I saw a lady in the back with her hand up. The mic.
Pretty good.
Thank you. I think my question's sort of been addressed, but I'm not about to break out singing, no. Adibe Gadao with Actis. More couple of comments, observations. I think from our experience, the nature of the asset class, the investment opportunity, infrastructure, requires large amounts of capital. And so I think it was to the question, there was a comment about size of fund. I mean, we have a number of pension plans in our funds, but for funds that are targeted at that space, you need to be of a certain size to invest meaningfully and to make the investments that are required in that sector. And then my other comment or question was really going to be about or observation was really about investing, public US pension funds investing in single assets and single projects. Because again, from what we've seen work in Africa, and I think earlier panelists spoke about it, in order to set yourself up to be investing in single projects, you almost have to set yourself up as a manager. You need alignment of interests. And we've seen that work with pension funds from certain markets. But I'd like to make the comment that I think one has to be careful about being a pension fund, Chicago teachers, looking to invest in a single project and manage a single project and make the returns from that.
Do you want to respond?
So we have not invested in, I guess, private-public partnerships or single assets. We invest through managers, and our managers will invest in those projects. And that's pretty much where we are. It would be difficult to bring to us a certain project and say, let's, invest in this road or this bridge. For infrastructure, we do allocate larger mandates, but it is through managers. And the managers may be in Europe or may be domestic, but what we're looking for is that manager that does invest in those assets in Africa or in emerging markets. And then that's kind of how we invest, through that manager.
If I can just
Please.
add one final comment to my fellow public pension colleagues. One of the things that we can do in our respective boards is to speak up for investments in Africa and to try and educate our colleagues about the benefits of investing in Africa. Most often you would get, oh, too risky, all of the above reasons why not to invest in Africa. But if you take those same reasons, you can apply them to Asia There are countries in Asia smaller than some of the countries in Africa, but yet we find it's okay to invest there. So that doesn't hold up anymore. So I think from our perspective, we can do more to help educate our boards, to open our doors, and when we get the calls from our African fund investors, to give them an opportunity to come and meet with us, to meet with our investment committees, to meet with our consultants, to share their story and promote investment in Africa.
Well, that's a good note to end on. I want to thank very much our panelists for being with us this afternoon. Please join me in expressing appreciation for their insightful and informative comments today.
Doing business in Africa, you can't afford to be without Africa Investor.